David Nicholas with me. All right, David, I wanted you on the show early because I read your stuff and you have a very strong opinion about this spending bill. All right, have at it.
Stuart, I'll tell you, this bill has elements in it that communist China could only dream of. I mean, just take the stock buybacks, for example. 1% stock on tax on stock buybacks. 60% of Americans own stock. Over 60 million Americans have money in a 401k. This doesn't affect just institutional investors. This affects mom and pop investors. This affects the middle class. And it really just ticks me off, Stuart, because they couldn't get their corporate tax bill done. So what they did is they came up with this 15% book tax on corporate earnings. And so this is going to affect 100 of the largest U.S. companies. Take companies like AMD, NVIDIA, take companies like Ford, Amazon. They're all going to pay more in taxes because of this bill, Stuart.
Okay, so why has the market this Monday morning, getting news that the bill has passed, why is the market up today?
Well, Wall Street generally loves free, cheap money, Stuart. They know that the coffers are open now in Washington, D.C. This money is going to come flowing into companies, but it's going to skew incentives long term. It may be good for Wall Street in the short term, but it's bad for the middle class. And so I think we're going to see stocks sell off because if this does get passed in the House, still got to get passed in the House, it's got to go to the president's desk, it probably will get done. I think when it finally gets passed and corporations realize, wait a second, if my tax rate goes up 30%, what's going to happen? Corporations are going to do everything to make sure that their earnings don't drop. So they're going to have to raise prices on their products, on their services, so the middle class pays more. So markets are up today, Stuart, but let's not get too comfortable. We'll see how this thing plays out.
All right, David, we hear you. Thank you very much for joining us. And look who is here.